This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another new edition of Bazaar Morning Call. It's a Tuesday morning. We're coming to you live, as always, from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. A brand new day. But did any of you check out the new Apple launch yesterday?
I did.
The Apple Vision Pro.
I did.
I appreciate it. I think really good technology, but what a price.
It's better if somebody gifts you, right, Nigel? $3,500. And but it's Apple is premium, right? I mean, I checked out what is the competition out there in the market. Yeah, that's the thing. I mean, you wear it around like goggles, basically, and it's the difference between this product and what is out there in the market is that this is a mix of virtual reality, which is fully immersive. I mean, those products are there. I mean, gamers use it all the time, and augmented reality, which means that you actually can place things which don't exist on top of the real world. I mean, your real environment around you. So, I mean, this gives the opportunity to switch between VR and AR, just in case your real reality is not.
I was just thinking, you guys, I mean, we already spend, 10 hours looking at a screen, right? Whether it's your laptop or your phone. And now, if that was not enough, you just take another screen and sort of plaster it on your face.
Where
are we headed?
The thing is that this is eventually, this is just not a prototype, but they just showcase this, right? And the launch is only early next year. This is expected to replace those 10 hours which you spend on everything else, right? So one device, and you can do your work, and you can sort of, do meetings, and you can watch content, and you can game, everything basically.
But the problem I feel with Apple is that overly expensive products in a very, very niche segment. So from a stock market perspective, I mean, of course, Apple's stock is at all-time highs. It's at all-time highs. But, just thinking about the future. I don't know.
I would just say that I appreciate the technology. Very good. Great product. Premium product, as you said, Prashant, as well. Just sit out of this one, right?
Unaffordable.
For sure. I mean, $3,500 or... even if someone had to gift it to me, I would give them an alternate. Don't do this, do that for me.
Get you a bike, Nigel. I mean, I think it'll be...
I didn't want to go down that road, but since you said it...
A bit cheap. I don't know. I mean, I don't know how much.
Yeah,
it'll be...
You get an Interceptor in India, 3.5 lakhs. So,
All right, well, that's the AR-VR mix which Apple has come out with. It's the first product launched, by the way, for the company in the last 7 years. We'll get to that more in detail a little later on the show. But let's quickly tell you what you need to know as we begin another trading session. So markets here in India, it's repeat and rinse. You are seeing a push higher, most definitely. But you're also seeing some profit taking at higher levels. The way I want to put it is that the markets continue to tease us with higher levels, but not quite there. I said this yesterday also, some hesitation, no conclusive break above the 18,600 kind of levels. So we're not quite there with that final push higher. On the upside, the level, of course, is the all-time high at 18,887, which is not very far away. You need just one or two good days. U.S. market, I'll come back to levels which you need to watch on the Nifty and Bank Nifty in just a bit. But U.S. market session was more consolidation. I mean, not very much. Very quiet day. The S&P was down a little bit. The Nasdaq was flat. The Russell 2000, which on Friday went up 3%, was down about 1.33%. So it did not build on Friday's gains, but maybe it was just the kind of day we had last, overnight. And there is more to go here for the Russell. Russell rallying would mean the rally in the US is broadening out into more economy-facing stocks, small caps, mid caps, everything, and not just the large 6 or 7 mega caps out there, tech mega caps out there, which has led the move so far. We had data, the US ISM services data, which was dovish, which was weaker than expected. But the key is the CPI data, which is next week, and we'll get that before the Fed decision, and I think that'll be more important. So in a way, the US market last night, overnight, more of a holding pattern kind of price action. For the Nifty, just a couple of levels. The swing low of 18,464 is the sort of nearest kind of level I can put out. That's the important level on the downside, which must be defended. Then you've got 18,420, but 18,464 is the first one, which must not break if there is further selling pressure, which comes through we're closer to 18,600 as of yesterday's close. The bank Nifty is neither here nor there. I mean, just look at the last 3 or 4 days. It's neither breaking out nor breaking down. So again, a little confusing kind of price action. Again, on the bank Nifty, the swing low of 43,706 is the one to be, which should be defended on the way down. And you can also kind of, if you're trading, use that as stops. Breaking above the recent high, which is not happening. I mean, we've been putting out this level for the last few days of 44,499 will perhaps bring more upsides. I think the SGX is indicative of not a very large start, a flattish kind of sideways start, 22 points lower. I mean, if you get a bit of a deeper kind of a cut right at the word go, maybe that gives you an opportunity. But again, like yesterday's close, like the kind of price action we've been seeing, this open, if you get this 20-point downtick, it's neither here nor there. Watch for these levels on both the upside and the downside for better entry opportunities.
No, absolutely. And, you know, this all-time high has been elusive for the market, right? Yeah. Evading the market for a while now. We saw it for the last 2-3 days where the Nifty has been failing to hold on to that 18,600 mark. It's been coming off from those levels. I think the intraday high that we saw last week, which was 18,662, that continues to be, a bit of a ceiling for the market in the near term and something that the market is struggling to sort of take out. So let's see how it goes. The mid-cap index is really where all the action is. Yesterday, we saw some heavy buying in a lot of spaces in the mid-cap index, whether it's the defense sector, a lot of the auto ancillary companies. IT has come back, especially in the mid-cap space. There was a lot of delivery-based buying in defense names as well. So, you know, all the action is in the broader markets. Now, one thing I noticed is that FIIs have turned sellers. It's been 3 days now, but FIIs have sold in cash for the last 3 days. Yesterday as well, they sold about 700 crores. All the domestic institutions bought a large chunk, about 1,200 crores or so. So this seems to be the template of the market. On the upside, this 18,660 level is a bit of a ceiling, and the floor continues to be around 18,200, 300. The big event upon us is, of course, the RBI policy, but I don't expect too much of a market movement from there. On 8th June is when you'll get the final data. There's a pause expected, as we've been alerting you in the last couple of days. So RBI may not move the needle as far as rates are concerned. But all in all, you'd have to say the mid-cap index, the stocks beneath the surface, are where all the real action is.
Well, that's right. Sonia, in FY24 so far, the mid-cap and the small-cap indices have done much better in comparison to the Nifty. We're talking about a 5-6% return on the Nifty itself. That's from March 31st. But just take a look at the mid-cap and small-cap indices. They have done a big outperformance. I'll tell you what, it could be a good time to look at your portfolio. I'm not talking about stocks that are just part of the mid and the small-cap indices. You're looking at individual stocks, they're up 50, 60, 70%. Some of them, well, there could be very good reason, but I think a lot of those companies, a few of them loss-making companies as well, that have seen a big increase. So it's a good time to look through your portfolio, say, hey, I've enjoyed this ride, but maybe I want to get out of this one because fundamentals, may not be justifying the kind of move that we're seeing on some of these stocks. So just a word of caution, clean up some part of your portfolio and hold on to stocks that you believe in. Now, in terms of trade setup, today, in fact, you have the Nifty Financial Services Index that will play out expiry. The Nifty continues to remain in this range of around 200, 220 points approximately. The shorts, well, they are being missed in the system. I'll tell you why, because the FIs, well, they haven't really been putting in money in the last 3 sessions. So in June, they're yet to buy anything. And there are no shorts in the system, so that's preventing us from moving higher. Otherwise, if you had some shorts in the system and the markets are not going anywhere, some of those shorts would be forced to cover out, which could give us a bit of a fillip. Now, in the last couple of sessions, the FI net sell numbers around 700 crores. You don't want that trend to move towards around 1,000 crores, or maybe they're taking a bit of a break after the kind of inflows you've seen in the previous 45 days or so. What did the FIs do in the F&O market on index futures? Well, they added some long positions. The long-short ratio is at around 50% apiece. You would like that short positioning actually to go up, which will give us some bit of reason to move higher in case, things stabilize. On the option side, you're not getting any, direction with regard to the buying of options because they're buying puts as well as calls. But it's good to see that they're writing more puts than calls. And yesterday, the 18,600 put, that was the most active strike. It added more than 30 lakh shares. The premium yesterday was around 50 to around 60 rupees odd. On an average, it was close to around 70 rupees. So for those writers, they're looking at that 18,500 and 30 odd level holding out. So that becomes your first stop loss. And otherwise, you go a little bit deeper at around 18,475 odd. So that's a crucial support zone. But the Nifty Financial Services Index, that plays out expiry. And for the day itself, going by the options data, The 19,375 on the downside, that should get protected. And on the upside, 19,550. Remember, last expiry, that was last Tuesday, we saw it break out of that range and you had a good expiry actually. So today, on the upside, you're looking at 19,550. The 19,400 put actually has seen a fair bit of writing, so you're expecting the lower levels to hold out. SGX Nifty is indicating a 20-point downtick. I'll tell you what, if you get a 60, 70-point downtick, maybe you'll want to take a bit of a punt, maybe buy into the index, but watch out on the downside for 18,475 odd.
All right, well, 20 points perhaps doesn't do it. Maybe a little more is needed. We'll get back to market levels and market discussion in a more detailed way a little later. But let's get you quickly started with what you should expect in the first half hour of the day. Abhilash Narayan of Standard Chartered Bank will join in for some global trade setup in terms of how Stancy is looking at things. Our research team brings you CNBC TV18's list of top 10 stocks for the day at 8:30 this morning. We'll speak with Siddharth Khemka of Motilal Oswal Financial Services for his take on stocks and what he likes.
All right, well, let's begin the day now with some views coming through. First up from Gautam Dugard of Motilal Oswal. He says that with healthy macros, range-bound oil prices, a robust fiscal balance sheet and moderating inflation, the outlook for the market looks optimistic. In contrast to the market consensus of 5% growth and Motilal's forecast of 5.3% growth, India's real GDP growth surprised with a 6.1% print in Q4. They maintain an overweight stance on financials, capex, autos and consumption, while they are neutral on IT and healthcare and underweight on metals, energy and utilities. In terms of stocks, Motilal's top large-cap ideas include ICICI Bank, ITC, L&T, M&M, HCL Tech, Ultratech and ONGC. In the mid and small caps, they like Ashok Leyland, Vedant Fashion, Metro Brands, M&M Finance, APL Apollo, Godrej Properties and Lemon Tree.
Okay, well, on the rupee, here are some views coming in. Kunal Sodani of Shinhan Bank says that the US dollar trims gains following release of ISM Services PMI, which was weak. Hawkish comments from ECB officials boosted euro against the backdrop of a sluggish US economy. He added it is important to keep an eye on USD yuan move, and for the rupee, 82.4 to a dollar acts as a support, while 82.75 to the dollar is a resistance.
All right, and on the bonds, Ajay Magnolia of JM Financial says with the moderation in inflation due to continuous rate hikes, there has been consensus for a pause in policy rates by the Fed, though some probability of hikes still exists. On the domestic front, we have the RBI policy announcement on June 8th, and the market expects the central bank may continue to pause. The 10-year yields are expected to hover around sub 7%. Liquidity position has also improved over the last week, which is supporting the money market. SDL auctions are a bit higher than the indicated amount, and the cutoffs are expected at current levels. He expects the 10-year benchmark yield to trade in a range of 6.97 to 7.02%.
Well, we have a lot of stock-specific actions to track for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. We'll look at MTAR Tech, Eicher Motors, Godrej Consumer, Delivery, JK Cement, Capacite Infra, Veranda Learning Solutions, BL Kashyap, as well as Nelco. Their stocks on the back of positive news flow. While you have IEX, they came up with their update, and the stock could react to negative set of numbers.
All right.